Was good, was good, was good, was good. All right, all right, all right. What is good? So today's the 28th of Feb. It's 3 a.m. and I'm out here in South Africa, JHB, and I'm giving us Chimomo. And today basically I'm gonna be breaking down gold, going through gold, um, looking at opportunities and doing some planning. So yeah, let's get it. Let's get it. Let's get it. Just before we go into the charts, so today's Friday. It's the last day of the week, and then Saturday is the 1st of March, 2025. Today's the 28th of Feb, 2025, and we'll probably have NFP next week and all of that. And let me refresh this. Friday, 28th Feb, that's today. And we know that there's quite a bit of news because we're looking at the calendar here for the US. So 3 p.m., there's some German news. The inflation numbers coming out month on month for Feb. And we don't really care right now for the purpose of this video. Um, so I'm analyzing gold um to catch moves, catch points, and basically take positions intraday to swing, but mainly intraday trades. These are CFD, leverage, the whole shebang, the whole shebang. Um, yeah. So high risk, and just a disclaimer, anything on this video from the minute it started going forward, um, is not financial advice. And yeah, past performance is not indicative of future results. Um, Trading and investing is a risky business, and never risk money that you cannot afford to lose. All right. So back to the calendar. Friday. Um, okay. German CPI. Interesting for the Europe market. And if you want to invest in Europe, or you have stocks there, or you have an exposure to that region, then this would be a key metric for you. And what I'm interested is this 3:30 and 4:45. So at 15:30, we have the core PCE price index and the month on month and year on year. Okay. And then we also have the Chicago PMI for Feb later on in the day. And the reason I care about this is because, um, this kind of news tends to affect the market that I'm focusing on, which is gold, the gold market. And if I'm in positions I would want to, manage risk, or if I'm planning to get into positions, I'd rather want to wait, let the news come out, and then, um, you know, look for an opportunity after there, or put on my position after there. Um, and okay, cool, cool, cool. It's not super heavy via news, but these are the three-star news, so the high impact, high volatility expected. All right, cool. So we know what's happening on the news front, and I want to go to my charting platform, which is Trading View. Trading View, and we're seeing that gold. Damn. Gold, gold, gold. In the last, let's just quickly go to the daily just for a quick second. In the last couple of hours, this thing has dropped. So in the last 3 days, it went from, let me put myself right there so that we can see the prices here on the right. So, okay, cool. We see that um yeah, let me put myself right. Okay, cool, 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 cool. So we see that gold went from 2,954 and is now trading at 2,879. How many dollars is that? How many dollars is that? Okay. We don't need a super complicated calculator. So it went from 953 minus 800 and what was it? 78. $75. $75 move. Okay. In 3 days, that's like what's the word? It's a significant retracement because that amounts to let's say 750 pips or 7,500 points um in 3 days. A lot of money can be made. A lot of money could have been made here on this little downtrend. But the thing is, we weren't even looking for downtrend. Early on Thursday morning, I saw an opportunity mm, well, for a sell because I saw the potential of this thing dropping, and that's exactly what it did. It dropped. Um, but I remained disciplined because I knew that okay, I'm a buyer of this market until further notice. Okay, let me just get rid of these EMAs. You see how these EMAs are now in between price on the H4 chart. This is a big chart. It's a higher time frame chart. Daily's like super, you know. On this chart, I can literally see November 2024. That's how many months worth of data? Um, about 4 or 5 months worth of data at first glance. Literally without even scrolling, nothing. And then versus the H4 chart, um, at first glance, I'm literally seeing a month's worth of data from the 4th of Feb to today. And in that, there has been all this trend, which is what created that daily chart. So a very big chart. Um, and when this is starting to roll over, it could be rolling over for a long time. And if I'm looking at these EMAs, I'm just, doing a high level overview of what's going on here. Um, but when analyzing the market, I I always start with market structure. After I know my indecision levels and key levels, um, but market structure first. That's what, allows me to analyze and make decisions because I know what the market is doing, what the volume is, where the volume is going, where the volume is. So what I'm doing here is I'm going back to show you, see, on the 27th, after we had been retracing for some time, we retraced practically because this thing's been in an uptrend. Um, just zoom out a bit. Okay, over here, 7 Jan. Mm, when did Mr. Trump get inaugurated? Let's have a look. Okay, the first time was in January 20th, 2017. January 20th. Okay, so already from 7, 8, 9 Jan, the market had been buying. So basically, if we try and look back here, when was elections? I think elections were right around this time here. Mm, this is when people decided, okay, uncertainty, risky environment, we wanna pretty much be in safe assets. And gold is a safe asset. It's considered a safe asset, even though it doesn't generate any income, it doesn't generate cash flow, it doesn't pay dividends, none of that. It's just a piece of metal. It's shiny, it's precious, people value it, so it's a store of value. And the thing is here, people want that for safety. You know, they are willing to sacrifice higher returns for more, like safety and protection, knowing that, okay, cool, I'm not going to make a lot, but I'm also not going to lose a lot. I'll be relatively stable. And that's what gold gives them. Um, and this is what happened. The market started to buy gold, and gold just started making higher lows, higher lows, higher lows, higher lows, indicating and showing that buyers are coming in, they're coming in, they're coming in. The bullish volume is coming in. right? And then towards the whole January is when this market turned fully bullish on this chart. And how do we see that? We see that by this EMA cross, and we see that by higher low, higher high, higher low, higher high. Let me see, show what I'm talking about. Uh, it was higher low, higher high, higher low, higher high. So this is a bullish pattern. This is market structure showing that buyers are in control of this market. There is more bullish volume in this market. There are more people buying gold than selling it right now. Okay. And the EMA then crossed to confirm that it's a lagging indicator. That's why I always start with market structure. Market structure is raw price data. It's what the market is doing. It's not dependent on any other factor besides buyers and sellers in the market. They create the price action, right? And obviously that's guided by other factors like analysis. Some people use fundamental analysis, some people use technical analysis. In the technical analysis, the things like moving average indicators, which I have on there. There's things like Fibonacci, support and resistance, blah 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 blah. The list goes on. I use a set of tools. Maybe we'll go into them as we progress, but yeah. Back to the market structure. And then it came up and made a higher high, higher low, bullish as fuck, higher high, higher low, bullish as fuck. And notice that price is above the EMAs, the moving averages the whole time, both the blue and the black. So the blue is the 33 moving average, and the black is the 66 exponential moving average. So the blue one is the simple moving average, and the black one is the exponential. And then we came back, we made higher high, higher low, higher high. And then we came back and we tested the low. And then we came here, and then we made this higher low, I mean lower high. But then look, we don't really care about that lower high because we're in an uptrend, right? And we haven't broken any higher lows. So it came back, created a higher low, boom, and then it made a higher high. Snap. Now we're in Feb, and this thing is at an all-time high. All-time high. Is it Feb yet? What time was it around here? Mm, What time was it around here? End of Jan. All-time high. All-time high in gold. Prices which gold has never, ever, 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 ever been in the history of humankind. $2,810 a pound. Not a pound, an ounce. My bad. $2,810 an ounce of gold. That translates to about 2,810 times 18 Rand 30, 51,000 Rand for an ounce of gold. Sweet. Okay, cool. The market structure is still intact. So we're not thinking about selling nothing. We are just looking for opportunities to buy this market. Higher lows, higher high, higher lows, higher high, higher low, higher high, and then came back, did a low, higher high, and then this is where we're at right now, where it made this major retracement here, this here, and this is what we're going to be talking about. This is just to give some context of where we are right now. Okay, cool, 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 cool. Let's delete all of that. And Let's make space like that. Bring that here. As you can see, my my chart is my canvas. My chart is my journal. My chart is my my field. My chart is my domain. This is where I do my thinking, I do my analysis, I do my prep work. Um, and this is where I just sit and watch and see how the market is trading and moving. Okay, cool, cool, cool. Gold. So we see now the moving averages, they cross back in Jan for a bullish sentiment, and they have never crossed ever, 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 ever again. And what's happening now is we're seeing a bit of retracement. If this price keeps falling lower and lower, say for example it falls below this 860 level, um what will happen is eventually these moving averages will cross and price, it's already below the moving averages, indicating bearish sentiment, bearish volume. And we can see that by all these red candles, lower high. However, um, this level here, this 100% level, this 2,880 level is support, number one. Number two, it is, it has not broken yet. It is being tested. It is being tested. So if we look here, when it acted as resistance, it came back here, price came up, tested, and then retraced for a little bit. And then it came back up here, tested, came back down, and then it finally broke through. When price had broken that level to make an all-time high, a higher high that was higher than the previous high, and a high that is ever higher than ever before, and then it came back down to create a higher low. And at this higher low, it tested that level again. So two times, another time. And we see this candle here that once came here before, came down, and then what happened? There was a lot of sellers exhaustion here, and that's what created this long ass wick. Price came back down, tested this level held, and then we went back up to the high, came back down, tested that level again. This was after the weekend, gapped, right? Came back down to fill the gap, not only fill the gap and test that level of support. And then we see this giant wick, seller's exhaustion. Um, and we see this candle, and then we see this bullish move up, right? Cool. Price pretty much ranged here for a couple of days. It ranged for a couple of days, for days and days, even over the weekend. It was in this range here between 2,952 and 2,922. So like a $30 range. And then we broke through on Tuesday. Um, Made a low. We came here, we tested this exhaustion zone, seller's exhaustion here, and this level held 1 2, but then it broke through yesterday, broke through, couldn't hold, and now we're at this level here, which is the 2,880 level, which is being tested. So why do I say it's being tested? It has not broken yet. It is being tested. And also, if we look at this Fibonacci level of mine, these the 110 and 120 stop preset stop loss levels have not been broken yet, right? They um you know, they being wicked out. So if you had your stop like right there, you'd be wicked out. Um, but this has not broken yet. Cool. So if we look here, we will see that this level was being tested here. Okay, let me use this. This level was being tested here. So the whole day this level was being tested. It was being tested here. It was being tested here. So that's what 4, 8, 12 hours was being tested here, 16 hours, and now we are here and it's still being tested. Never ever has it broken. So if this is a level of support or resistance and price comes here, testing, that's testing, that's still testing, that's testing. Um, this is testing. And then even if it comes and has like a bullish candle here that looks like it's breaking it, that's testing. So if this was like that, like that, whatever. Um, this is a testing. So this level is being tested on the H4 chart. So patience. We need to just wait. We need to wait. We need to wait because we don't know if it's going to break or hold. We don't know how much volume is sitting at this level or might come at this level. We don't know. I don't know. I do not know. Okay, this is tested level. And then broken would be something like this. So in a bullish market, we're making highs here, high, low, high, high, break, and then you need a clear break beyond the level that you just broke. So you need two candles, one that goes and one that goes through. And then if you want to be super conservative, you can even wait for another one. Then you can say officially, this level has been broken. Okay. And then if it was a downtrend, it would look something like this. You're making your way down while price is making its way down. It's making lower lows and lower highs. And then you get here, break, no, tested. And then if it does something like this, tested. And then only if it creates another candle beyond, then you can say it's broken. But if you want to be super conservative, you can wait for another one and say, okay, officially, this level has now been broken. Sweet. An example of a broken level is um, basically here was tested, broken. Um, but like, yeah, that's not even a great example if I'm being 100. And if you look here, tested, 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 never ever broken, tested, even though we had this big bullish candle, it was just tested, tested, and then we had this little rejection or pullback. You can call it whatever you want. And then we finally came through, tested, and then broken. And then this is like a conservative broken. Um, and then we had this pullback to try and create a higher low, but we actually came back to test this low, this higher low. Um, and then we made a low here. And then we tried to make a higher high, but we failed. So we just made another high. And then this thing came crashing down. and now it's found support. Is the support gonna hold? I don't know. But yeah, we have tools to analyze and prepare ourselves and make sure that when the opportunity is ready, um, we can take advantage. So what I'll be doing like in this moment is I'll definitely be marking out some levels. I would be doing this, which I am doing right now in preparation for later. So this candle that we're at right now, so it started at 12 a.m. Right now it's 3 a.m., 3:41. 3:41 a.m. So this candle is gonna close in the next 20 minutes. Um, this candle is gonna close in the next 20 minutes, give or take. So let's say 19 if we want to be technical like that. Um, but yeah, what I'd be doing or what I'm doing is I'm marking out the open of this bearish candle sitting at support because this level is a level of confluence, right? What do I mean by a level of confluence? I mean, I mean a level that has two different types of levels coinciding, um, which makes it a very strong level or a more noticeable level to the market. Right? So here we have 100% PRZ, PRZ or fib retracement. PRZ stands for price reversal zone. So um, fib retracement, that's one level identification. Another identification level is the fact that we have this support level on an H4 level, identifying all these times that price has basically responded around these levels. So one, two, three, four, and we're gonna call that H4 support level. So we have two levels that are coinciding, right? And that's what makes it a stronger level. If it was just a support level, it wouldn't be as strong. And then if it has three levels, it makes it even stronger, etc., etc. So say for example, if it was a level where now you have support running off the H4 or whatever, you have a fib retracement sitting on a PRZ level, like your 38.2, your 618, 786, 88.6, your 100%. 23.6 and your 50% on PRZ levels. They are levels. They just not like PRZ levels in the way that I analyze the market. 50% would be more like equilibrium, and 23.6 is continuation of the trend. It's not really a new higher low point. Whereas if price retraces back to the 38.2, 618, 78.6, or the 88.6 or the 100%, that's well, 100% wouldn't be a higher low. It would be back to creating a low. And the ones above would all be higher low points. Okay, cool. 23.6 wouldn't. 50% would be a 50% would be equilibrium. Now we have a level which is considerable. If it's just one level, like if you just see one level, you 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 don't want to take those trades. You want to avoid them because they have less probability of playing out. And so what I was saying is like super strong confidence level. Say for example, price sitting on a moving average. It's sitting on an exhaustion zone. This here is an exhaustion zone. And exhaustion zone, I draw them by using the wicks, where we had sellers exhaustions, where sellers got exhausted down here into this level. And then this wick was created because buyers came in and exhausted all those sellers. And then you just drag this through, and then you have seller's exhaustion. We see it held here, it held here. Here, price was just powerful. And yeah, I broke the seller's exhaustion level, which is why I'm basically pulling it back that way. Mm. Okay. So where you have multiple levels and then prices there, it's a stronger level versus if it's just one aspect of support or resistance. Now, here what I'm doing is I'm identifying the high. So just to back it up, we did those higher lows and higher highs and higher lows and higher highs and higher lows. So this means that I'm bullish. And I have said this before, I am saying it again. I am bullish. So I'm not looking for sell opportunities. I am looking for buy opportunity. And where do I buy? I buy at support and I sell at resistance. Since I'm not selling, I'm not looking for resistance. I'm looking for support right now. When I get ready to sell, to exit my positions, to exit at resistance, then I'll be looking at resistance. Right now I'm looking at support, and right now we are at support. But just because we're at support does not mean that I am just going to open a trade or just buy. No, 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 because this thing could keep falling. This thing could keep falling, falling hard. You see here we have this level in black, 2,800. If price breaks here, what it's doing is it's breaking structure. All these higher highs, higher lows, higher highs, higher lows, it will have broken them, and then we will have created a lower low. And once we create a lower low, we have broken structure. Some people call it change of character, some people call it whatever. I call it break of structure. Structure will have been broken, and we have shifted from a bullish structure into a bearish structure, right? Even though it might be temporary, because overall this market is very bullish. If we had to zoom out and look at the higher time frame, it would just mean that, okay, maybe we're retracing for the next couple of days or couple of weeks. We've already seen the retracement starting over the last 3 days. However, I am a bull, I am bullish, and I am anticipating this market to make higher highs. What higher highs are we talking about here? The higher highs that we are talking about is this 2,965. That's my projected. Um, Next point, if this level holds. So how are we gonna know if this level holds? Because we don't just want to buy um, right now just because it's at support. I mean, you could if you have, you don't mind sitting through drawdown, you don't mind just getting in when the market is in a downtrend. Because best believe if we go down onto the lower time frame, we're gonna be seeing clear lower lows and lower highs, lower lows and lower highs. And who's to say it doesn't continue doing that, which will therefore create um, this level breaking here on this chart. So I've identified the open of this previous H4 candle because what would signal to me that, okay, bullish volume has come back into this market is a close above that level. Very objective, no subjectivity, nothing. If it continues falling down, then I know that there's not enough bullish volume. There are no buyers here that are significant enough for me to say, okay, there might be a transition of us going bullish again. All right, cool, cool, cool. So I have that just as a placeholder, my little green level, and that level is 2,883. So basically about $4 from where we are right now. If price can close $4 above that level, then I'm getting ready to buy. Simple as that. I'm getting ready to buy, but I'm not going to do it on this chart. This chart is too big. It's a 4 hour chart. Every candle is 4 hours. So I would do it on a lower time frame. Also to increase my accuracy to pinpoint those lower level support and resistance levels so that I can enter at support on those charts. Okay. So let me just see here the visibility of what we're working with here. Ooh, okay, I don't really want to see this level on all these time frames. I just want to see this level on the H. No, 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 no. Undo. There we go. Yeah, I just want to see this level on H4 and below. Cool. Um, all right. And here we have it. You can see I have been aiming for a higher high. We didn't get it yet. Um, and now we wait. Now we wait. Now we wait. We can see price came down, made a lower low, lower high, came back to this low again, made a lower high, showing that okay, bearish pressure, bearish volume, um, is high because the bulls couldn't even push it up to this previous resistance, therefore creating this lower high into these EMAs. And then look at these EMAs. The H1, the EMAs are facing down like this. Super, super, super bearish, showing that there's a lot of bearish volume going on here. So what we're looking at, oh snap. Okay, no, we're fine. Um, almost thought this red level was something else, but it's the stop levels on the Fibonacci retracement. Okay, cool. We know that we're testing this level. And I mean, what I'll be doing right now is pretty much I just want to mark out my resistance levels to see when we start breaking resistance. I want to know. I want to know because what does it mean? It means that bulls or that bullish volume is coming back into the market. Okay, sweet. So this level here is, let's just mark it out. You can say 2,887. Let's have it at the top because it's a resistance level. And then we have this level here. So I'm just creating my little range here just so I can track price um, to see how it's trading in this range that I have drawn here. And then this level here is 2,871. 2,871. Cool, cool, cool. So we wait. Now we wait. I mean, like, I'm not even gonna bother going on the M30 right now because why? I mean, like, if I just wanted to watch and observe the market, yeah, I would. But it's almost 4 a.m. I guess we can just wait for the candle to close and then we can wrap this Zoom session up or this video up. Um, but yeah, maybe I'll do another video later on in the day. Either during, nah, not necessarily London session, during New York. So, shoosh. London or New York. Let's see how the day develops. Follow up to see how this market is moving. Right now, gold is trading at 2,875. It's 3:55 a.m. South African time, and we are on this call here or on this meet, analyzing gold, looking at the potential. And the potential is to wait and see how this level of support plays out. I mean, we don't want to be playing around here unless we're buying, but we don't want to be buying um blind. So we wait. These EMAs are pointing down, bearish. H1, these EMAs are pointing down, bearish. But also, I wouldn't wait for the H1 EMAs to cross if I can clearly see that there is enough bullish volume at the level of confluence that we identified for um, this transition to continue. And I will have seen a transition on the lower time frame. So what am I talking about? As I have identified these levels here, lower low. Okay, let me just maybe back it up a little. Okay, lower high, lower low, lower high. Came back, made a low, came up, lower high, lower low, lower high, and then lower low, boom, lower high, lower, well, low, higher low, right? So this could also be a signal, because this low is higher than this low. All right. And then we came back here, we made a higher low. So we could go down, breaking shit, come back, create another high, lower high, and then make another lower low, breaking shit, and then just continue um with that movement, right? That is one possibility. And then the other possibility is pretty much we just range the whole day, or we range until next week, whatever. We just range, price keeps bouncing around here, you know, blah blah blah. And then that's pretty much what we do. That's another possibility. And the ideal situation for the analysis um that I have done here, and the move that we're going for, is basically reacting to the bullish volume that's coming in as anticipated. And that would be something like, if you're very, 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 very jumpy, very aggressive, and maybe you willing to take a lot of drawdown, you could buy at support when it comes down here. Buy, boom. You're buying at the bottom of this range. You're buying at the this confluence level, and then I don't know where you're gonna put your stop. That's the thing. Super aggressive. Maybe you could look at higher time frames, but the thing is, then you have a wide stop. And that's not what we're trying to do right here. Um, okay, cool, cool, cool. So, um, ideal situation, we trade through the rest of Asia, maybe come back down here, find support at the bottom of this range, you know, get some bullish volume, push this up, and then eventually break this, take out this high here, you know, maybe even take out this high, maybe even take out this high. And then that's the break of structure. So, and then after this, these EMAs will also be turning. They'll be turning with that. And then pull back, into a level of support, maybe something like this 287 level. I mean 887 level. Catch the next higher low because we already have a higher low here. Or a low here. So this will be the first higher low point that we are catching here. And this is basically higher low in anticipation for a higher high. Higher high would be a high that is higher than this high, which would be somewhere here on this chart. But remember, when we trade, we execute on the lower time frames, and our projections are based on the higher high time frame. So ultimately, we said 2,965. But you could be conservative. That would be the next higher high. You could be conservative and say, okay, I'm only going for 2,952, which is the next level of resistance. Or you could be even more conservative and say, I'm going for 2,922. All right. So you get into your trade, bah, you wait for your signal, um, a variation, which would look something like this, and then bullish engulfing, and then you pretty much would hold it, bah, and then when it gets here, you can either exit and cash out, or you can hold, but ideally cash out. Cash out, you're done. Um, Wait to catch the next move. And that's another possibility. This is the ideal situation. This is what I am waiting for. But it's been real. It's 4:02 a.m. Let's have a look and see how these candles have closed. Oh, entry would be here. Stop would be, below the previous wick. Ideally max $5 move stop loss, and we'd be going for, let's see here, it would be something like this. $30 move, and our stop would be something like this. So that's 1:6. So if you're risking $100 on this, you're making $600. If you're risking $1,000 on this, you're making $6,000. Um, all right, cool, cool, cool. And yeah, this is the plan. This is the plan. Okay. Um, Let me just clear these drawings. Maybe let me screenshot it right quick. Um, I have it as a, you know. Mm, let's clear all these drawings. And what I'm doing is I'm basically seeing, okay, this M30 candle in the last 30 minutes did not close bullish. Not a good sign. Um, it shows that the bearish volume is still in this market. Okay, if we look at the H1, we want to see how the H1 closed the 3 to 4 a.m. period. Okay, what's going on? Oh, H1. H1 did not close bullish at all. Look at all that bullish exhaustion up top. All of this exhaustion, exhaustion. This is what we call exhaustion. This is all exhaustion. Buyer's exhaustion, bullish exhaustion means bulls were exhausted. Okay. H4, this is the one we really want to see. Oh my goodness. There's no bullishness going on here. Remember we said we wanted to close above here. Okay. Okay, that's a wrap from me. I'm gonna check on this later. Right now, I'm gonna go to bed. Damn, got a few meetings in the morning. One at 8 a.m. Another one at 10 a.m. Actually need to prepare some research for the 10 a.m. one, but I got it covered. Okay, cool, cool, cool. Uh, Thank you so much for joining my gold analysis. Um, Peace, love, and prosperity. Peace, love, and prosperity.